Yo, we back. FXBros Sunday Live weekly analysis on Australian dollar charts. And we're here to discuss that indeed. As you can see, I got my daily charts up because you already know we're starting off the week to see what the previous day did. And it will help us determine how price will continue to trade into a previous daily high or a previous daily low. One thing we can note is we did create a new low for the year. That low we've been looking at from July 14th. We broke that on Friday, really Thursday. Oh no, that was Friday. Yeah, Friday. So if we look close on that, you can see exactly when we broke that. That was, if you can see, I notated the old low on the 4-hour. We'll probably be able to see that better. This red dotted line right here, that was the old low from July 14th. And we broke through that right here at 1 o'clock in the morning on the 16th. That 4-hour candle from 1 to 5. So that was the break of that morning, that sell off. And actually, that was a difficult day for me because I was actually looking at this swing point right here to get into buys to try to attack this little order block and maybe potentially all this gapped price area up here on a daily. I was glad to get traded into, but the market obviously wanted to break the low and create a new low for the year, which it did. And now we're back on this rejection type situation. We want to see if we get bullish continuation. I do have a buy entry based on a smaller time frame to see if I can scalp into this bullish continuation. Nonetheless, as long as we continue higher, we do have more clean traffic we are building for a sale to turn around. So we just have to look for areas of resistance to see where market can turn around from. So what I want to do right now is go to the daily and mark up my daily, my previous daily high and low. And let me see if this is still valid. I don't even know if I want to look at these anymore. It's probably for 4 hours. Let me see. Yeah, I don't know what that's for. I'm gonna take these out. Let's have some cleaner charts. So let's remove all these lines. Remove. I could leave that up. This is our old high right here from the previous day of the 16th. Oh, what was Friday? Was it the 15th? No, 16th. Let's go down to the 1 hour so we can zone in on this low. Now, obviously, I'll mark the low we had here, but I'm just gonna move that down since the weekly low is the daily low. So no need for two lines to be right there. And then we're gonna mark the previous daily high, which is, let's see. That would be an old high up here. Did the market open? That's an old high. Then we get a market close right here. That old high would be right there. And as you can see, we are open in the market for the Sunday right here on this candle. So we did break the previous day's high. We broke back below that high, and right now we just kind of in the middle of that, looking to see it. Like I said, I do have a buy entry based off this push up. It's like a little minor auto block situation. This whole area right here. Basically, this little situation from that big push up. I want market to tap down out of that. And it damn near kind of did, but that's not what I'm looking for. I'm looking for a real deeper sell. So I don't care if it continues to go higher because the market tends to play around your entry and move higher away from it just to give you a liquidity grab and further tap you into your entry the way you get filled and then push higher in the direction you wanted to go. So you just got to be patient and waiting for that move. So in essence, we can go over pretty much last week, and you can see how we get into these moves as I break it down and show you what we look to enter and also what we look to take profit at. Because getting in the trade is one thing, but if you're just holding on for dear life, that's really not the move in Forex. That might work for a buy and hold strategy, but not here. So we want to go back from the 11th and 12th and then discuss what happened in the market. And you can see how we would locate trades. So, bam. I'm going to put a vertical line there. So this is the beginning of their week. Bam. Make sure nobody in this thing. Oh, Scully. What's up, brother?
What's happening, man? What's going on?
Ain't nothing. I ain't here. You came in.
Oh no, you good? You good?
That's what's up. Yeah, as y'all can see, this is basically where the week started at, this vertical line. And then we can just go throughout the week and kind of just show you our reasons on why we would have gotten to a position or why not. So basically I remember this from last Sunday. This area here was basically consolidation. And we were simply waiting for a breakout, which you didn't get that until 2 o'clock in the morning. So 9 times out of 10, you probably would have missed this move because we would have been knocked out sleep. But you potentially had a smaller move, a smaller scalp in the morning if you were kind of looking at the higher time frame because market traded out. It did break out of this consolidation, but it also created a new high on this little bullish move we were experiencing from here from the previous week. And then what happens after you break this little resistance up here, you kind of create a little level of support, this little zone. And as you can see around 6, 7 o'clock, you get a little swing situation that you could have gotten to a buy and you could attack this old high and at least try to run for a smooth little 10 pips. So let's say for instance on the 7 a.m. close, meaning 8 a.m. open, you got into an entry 68.78 and you want to take 10 pips, so 68.88 is bam right at the top of this move. And as you can see, you probably would have got taken out right here, if not right at noon. And you could have had stops below this candle or below the whole swing. And as you can see, stops never got touched. So that was a good move, just following in the direction of the trend. Notice there was no counter trend situation. We were going bullish. We saw the swing in the morning, rejecting off this resistance turn support situation. We also see market tap into this little price gap area. So another one for you small risk to reward type of entry scalpers looking at the 1 minute time frame and whatnot. You probably would have got even a better entry dipping down to these areas. But nonetheless, if you're waiting, even if you're waiting for the 1 hour to close, it showed you and gave you confirmations that it wanted to continue to go bullish. And you just got to trust that in trading. You can't just be like, oh, I want to wait for more confirmation. Nah, because you already got to take profit area. If you wait for it to get higher, two things is happening. One, you further away from your stop loss, which now your risk to reward has to be greater for it to make sense. And you closer to the next level of where it's most likely to break through. And when I mean close, I mean barely a pip or two. So in that scenario, you would be trying to get 2 pips and risking 20. That is like ass backwards. So when you see the confirmation, you get a nice swing. You get a the middle candle is the lowest between the first and third, if you will. If it's a bullish swing, then that middle candle should be the lowest. If it's a bearish swing, that middle candle should be the highest. So, for instance, this would be a bearish swing to the downside because you have the middle candle here, which is the highest point. You have your first candle right here, and you have your third candle. Typically, we would want to see the third candle break below the lowest of the second one, like you have here. We have this perfect swing with the third candle breaking the high of this second and lowest and the middle candle of the three. So when you get that swing situation, take that as confirmation. Take that as a roll of the dice on the crap table. Like you hot. Roll that dice, hit that seven, and keep it moving. And I think it went for more, but nonetheless, barely more. Nonetheless, that was a nice little entry, and you would have been done for the day. Let the market consolidate, let it play off. And as you can see, the market was coming back down to where this new little support was created, this new minor support. Potentially, we were looking to see if it was going to break this and maybe try to come down here and create a change of the structure, a change of character of the market, this bullish character that we see. And we didn't get that till later on. So this could have been another potential buy area. You know, like I said, it's still a zone of support here of this resistance that was broken. So you can call that another area to buy to go with the continuation of the trend. And it was a late night situation, so this would have been like an overnight sleeper if you would have stayed up late just to catch that entry. And again, take profit at the next level, the next zone, the next higher high. And if you would have caught buys, especially based off my color chain system, we would have got a close at 69. 8 pips above that is 78. Oh no, 69, 77. So 77 right here, you would have got entered at 2 o'clock in the morning. If you would have just set your entry, stops below here, about 20 pip stop loss. And your take profit would have been about 97. So that would have been like a nice little 1-to-1. Easy. You let a runner run, put it in break even, and obviously that trade would have closed at break even. Nonetheless, if you would have woke up though, which we all do in the morning. You wake up in the morning, check your charts, you start to see a sign of a reversal. And if you see this market selling off, especially knowing we had news that morning, that would have been a great indication to probably get out of that buy before your break even hit, so you can capture some profit or at least take majority of the risk off in profit. So, that's just all a part of managing. But nonetheless, this big sell off. So, how will we look to sell at? First of all, you got to be expecting a move like this, because if you look back, we pretty much were coming from a retracement, because overall, as I remember, the market was overall bearish. So this move here from that previous week on Friday was just a retracement. And as we can see from that retracement, this really was the move to turn around. But this was on Friday. We consolidated. We had a breakout leading into Sunday, going on Monday. Really no movement on Monday all day. This here would be considered a false breakout. It's another consolidation, but it's a false breakout at the top of a retracement coming from a bullish sell-off on a higher time frame. And the reason I know that, because this would be your first sign of seeing big, strong body candles reversing all this bullish play. It's the first sign of strong bullish candles, bearish candles, coming off of a bullish retracement. You know, based on the higher time frame. If you look at it on the higher time frame, it looks way better. And as you can see, we got a breakout, but the breakout didn't last forever. So that wasn't a true breakout. It was just a breakout for the whole Monday to just be consolidated. Then again on Tuesday, you get another breakout, but that breakout, look how the candles, instead of on this breakout, big strong bullish candles to really entice the market to get into buys. This one, you got what, 7, 8 bullish candles, and they all kind of like the same size, real, I don't know, real copy like it's the same type of candles got printed over and over and over. But it was also prepping for the news release. So this buys was just to get them in a great position to sell and to take out stop losses for all retail buyers, catching buys from here and from here with their stop losses under here and under here, for all the people that was riding that big breakout initially on Sunday. And as you can see, that one move on news took out Monday's trading, took out Sunday's trading, and a lot of Fridays. It was September 9th. That was Friday, yeah. So damn the majority of all Friday leading into Sunday. So that's proof in that this whole little extra extension leading from this low was all just a retracement on the higher time frame to continue bearish. And that move is what caused us to create a new low for the year. So as you can see, we didn't create any type of bullish movement, any type of highs being taken out, any type of structure. So after this green candle, if we didn't get no highs taken out, and if you miss this move, your best bet would be to just put sales, an entry on sale below the low, stops above here, and just ride it. And if I put a line right here, we'll see if you ever got stopped out. None. No stops. So you'd have rode that wave all the way from 67.80 to probably about 66.80. 100 pips. This whole move right here, if you wasn't paying attention at the screen on that news release, that whole move was 100 pips. If you missed it, and you try to catch a retracement or you try to catch buys and you think it was going to retrace up, you lost even more. So you missed the move and you lost. And nonetheless, you terribly went against the major trend. The major trend was bearish. This whole move was to fake everybody out that we was bullish. A lot of people thought this was just a liquidity grab to turn around and go uh, bullish again. But as you can see, you gotta read the signs that the market is telling you. And if highs are not being taken out to create bullish structure, then don't create something that's not shown. If you're seeing bearish structure get taken out, then let it happen. Let it happen and trade into that. So nonetheless, when you really understand the higher time frame structure and what's really happening, you'll be able to catch these moves in the future. But if you broke it down just like I did and you understand what happened on this news release and how important that was, you would have easily, you could have easily just put a sell limit in here and sold off into this. Like I said, if you would have held until, I believe this was Friday on the 16th. Yeah. That would have been a nice 100 pips trade you would have got. I mean, granted, the people who held from here, if you caught it from here, I mean, you in the 150 plus, in 1 week, roughly 4 days. So, I mean, that's the home runs you want to try to get, not trying to grab 500 pips every week. You know, you're going to have those weeks when you do grab a lot of pips out the market, but we want to be consistent. And that's why I created that Word document to have a structure on how I grab pips out of the market and something that can be followed and easily be captured on a daily basis. 10 pips a day in the Australian dollar market when our average movement is anywhere from like 80 to 100 pips. That's easy. You know, talking about a potential 1 to 2% gain per day, 30% gain per month, 200, 300 plus percent gain per year. Yeah. So, nonetheless, like I said, if you would have continued down with sales, you would have been good. If you were looking for a reversal, it would have been a lot of reasons for you to come up as a loser. But the way you would do it is find out a true low, any type of true low, whether it be a double bottom, or a price hitting a support from an old area, old price action area. That's how you find true and strong lows, and then you can base a trade off of that area. So we had a low created here, and this was on Tuesday. But based off of my strategy on an 8 pip entry, we never got an entry on this. So more reason to hold your trade. I didn't see any reasons to really get into any type of buys until I believe it was Wednesday morning, whatever the 13th is. I think it was Wednesday. Or the 14th. Yeah, it was Wednesday morning. Right here we had this low created. And not only was it a low created, but we had a bullish engulfing. So it's like, okay, we getting there. So let's look at this purple line in the past and see if we got any previous history. So yes, we do. We have a zone right here. It's a nice support zone. Also tapped into it right here. A lot of wick rejection, which continued the bullish push. And this is all they needed for that retracement. Like I said, this was a higher time frame retracement to sell off. So a lot of proof right here with this wick rejection off this zone, double bottom, 2. So here we are printing another double bottom. So that alone, double bottoms where you got a previous double bottom and it didn't take out these lows. So this double bottom right here was created higher than the old double bottom. Like, you got to look at smaller confirmations like that. So you get a double bottom here. Smaller time frame, this would be like a nice little auto block entry on like a 5 minute, 15 minute to get in. After you got this little push, but this really wasn't a real strong push. This was the real strong push. I would say this would be more of a confirmed auto block for the future. But nonetheless, you got a double bottom here, 8 o'clock in the morning. You got a nice signal to enter 67.25. We enter 8 pips above that at 33. We got 10 pips right here at 43, right here at the highs. And then another 10 pips at 53 right here. And you had 3 opportunities to get out that trade at 20 pips in profit. You had 3 opportunities right here. And if you would have let the trade continue, you had multiple opportunities to get out of this trade. So that probably was the roughest and the only buy opportunity had throughout this week. So as you can see where I was wrong. Yo, what's up, Slim? What's up with it, my boy? We in this thing, you heard me? So yeah, man. I did capitalize some profits on that move, but I was holding, expecting this to get filled. And as you can see, we never reached into this area, but believe, market does not forget. So we're going to keep that right there so y'all can review this live and realize that this area right here, potentially, very high probability, high potential that market will trade into this area. And just to be more precise, it'll probably at least want to get into this middle of the median of this area, like right up in here. What we have, 6793, 69, 13. What's that? 13, 03, about 50 something. So that's about halfway. Let me change the style on that. So bam. Just keep that as a reminder, everybody, for the future of what market can trade into. So nonetheless, if you'd have caught that buy in the morning, great. Lock in some profits. You know, something I didn't do. I think I took a little bit off, but I didn't lock in because I had a very large position on that buy. I was really expecting, but I was kind of like, I ain't gonna lie, I was low key sucked it. What had me thinking that was this. I thought this was more of a liquidity grab to tap in it here, but after I realized it was a sell, I sold off into the market, but still not realizing it was going to this zone, this low. And after it retraced up, I'm thinking, okay, this is the buy to fill us in. But like, nah, fam, this sell was the sell continuation for the higher time frame coming from this whole bullish push that was nothing but a retracement. And sooner or later, I'm gonna go to the higher time frame so I can show y'all. But nonetheless, as the market continued on, we have a sell signal pretty much right here midday, which is not as strong of a sell signal. And the reason why is because it happened at 1 o'clock and volume dies off typically around that time. So I want to wait for a better time frame when high volume, bam, we have it right here, 4 o'clock in the morning. Now you probably would have missed that entry at 5 o'clock in the morning, but if you would have waited patiently and not just jump into the move, expecting this low to be taken out, because that was the move, that was the take profit. You get a nice little retracement, And the retracement came into the order block area, and I'm gonna show you what that is right here. We'll duplicate it. This little area right here. That's like the wherever price pushed strong from this little area of consolidation, or this little last bullish push on this bearish continuation, when it shows a strong push, somewhat of strong candles, all the same color, all the same direction. That's more of a area where a lot of orders were committed and entered into the market. So market likes to retrace because the hedge funds and central bank and large financial institutions typically can't enter all their trades in on one trade like me and you can. We can enter in our little 1,000, 10,000, 100,000, $1 million account size trades and enter, exit all day long. But when you talking about 800 million, 30 billion, position size, they have to enter those trades in the increments. So they might get half or a third of the position right here, and then they have to wait, create another scenario for them to fill another scenario, another trade to continue for their sales. And typically, where they do that filling is at the order block, the previous order block. And notice this really wasn't one, even though it's in that zone. That's not one we would notate. So let's see. Got anybody in the chat? No chat. We're still alive with it. Let's see. So with that being said, that was your sell continuation right there. About 9, 10 o'clock in the morning. We didn't take out the previous highs here and here on this bullish push. And then the market created an engulfing candle. So you could have either sold right here, or you could have sold on the move you missed, which is right here, and a retracement into that sell. Or easily you could have sold off right here and rode the wave all the way down to the new low. And this move up probably would have got you in a little frenzy. You would have been worried, but nonetheless, as long as they don't take out a previous lower high to mess up structure. This is bearish structure. Lower highs, uh, lower highs and lower lows getting created for this bearish structure. As long as we don't get that taken out, then we are still in that bearish structure, and you just ride it out until you get any type of inclination that we are changing structure. And the first inkling that you got was right here. This little reversal to continue bearish was broken right here on Friday, I believe. Yeah. And basically, man, we got another structure broken here. Price did break above here. I'm still waiting for market to enter in my buy down here, waiting patiently on that 5-minute order block coming down bearish. Like I said, I'm going to show you right here. This little area right here, I'm looking for price to come into. And as you can see, market tapped into my area but did not enter. So that's a good thing, because if I get a third tap and we don't enter, that'll be more confirmation for me to just enter into a buy. But I also had to be cautious and wait, because this is a lower time frame. I got to realize that this area can be a test to just break and take stops, because we do have a stronger auto block area right here, if you will. And the only reason I say this is stronger because it's a double bottom. But if we look at the 15-minute, now you can see how this pushed higher. So this whole area would be the auto block. But I will wait for candles to close at least into this, and then we'll push higher. All this tapping is good, but as you can see, we're not taking on any previous highs, so that we're just consolidating right now. You should be able to tell when you're consolidating by 4 candles. It shouldn't take no more than 4 candles to let you know you need to pump the brakes, chill out, and wait for a better setup. You know, don't be looking at no barcodes and trying to realize why you're not getting good interest on buys and sells. Like we might be getting entered soon, but nonetheless, if we do not get this buy as a correct entry and we trade lower, I would have to look at the higher time frame, and I would say I would have to go to the higher time frame. I don't know. I mean, the market could create a double bottom on this new low and then push high again. It could. We have indecision right here on this 4 hour, so it could continue higher or push lower. Who knows? Oh, we did get entered on that buy. Um, we do have a confirmed swing situation right here. It's all based on how this daily closes, but we did price higher than this middle candle's high. So that's one thing we did do, but we have to close to really make it 100% confirmed. But I mean, on the 1 hour, I really don't see too much of clean traffic. I mean, I have to zone out. I mean, I see the clean traffic up here. I really would just have to wait for price to break above 67.70 to really confirm a bullish move. But right here, we in the macro, and we seeing how price will create structure to get to this price. Because we can see what's going on right here to let us know if we're going to come up here. And I mean, this could be considered the low, in an hour. We had a nice little trade below that price. Market popped back into the zone. They had a strong rejection, created a new low. Friday trading back into that zone again. So we could continue higher, but it's really too soon to tell on what could happen. Like I said, we have a lot of potential areas where market could want to trade down into, find support. Like I said, it did break this resistance right here a little bit, created support right here, pushed higher, broke this resistance zone, created support, push higher. So we got levels down here and down here. So I'm trying to catch the initial move to see if we can catch this push higher from here on a smaller time frame. My take profit will be tight because we buying from a higher area versus buying from here. So I do know that. But yeah, man, overall, that's how we take a glance at how these markets are doing what they do. And then we'll take this off. We're gonna take a glance at the news right quick. See what the news. See if it's something we can use. See what we got going on for next week. Monday on the 19th. We got news in the PM on Australia dollar. But I do need to notate we do got inflation rate news coming out for Japan. Even though that really doesn't too much affect our trading pair so much, but that's just something to look at on a global scale. What Japan is doing against other countries. So I always like to keep that in mind. That is heavy news for overall global trading. Tuesday we have building permits, housing starts. That's in the morning, 7:30. Wednesday we got existing home sales all morning, 9 o'clock. We got Fed interest rate decision. Oh my gosh, we about to turn up, y'all. 1 o'clock. FOMC. Oh my God. 1 o'clock. It's turning up on Wednesday. I don't even know. I don't know. That's gonna be a definite close all trades and no trades until that interest rate come out. Like I'm not even gonna play. I learned my lesson for here on out in my career as a trader. I'm not gonna play on these new releases, y'all. The only way I'll play, I'm gonna say this, is if I'm in profit like 50 plus pips already with a ridiculous stop loss set, either in profit or still below the swing. And the swing is like a triple bottom on the daily, my nigga. That's the only way I'm gonna play. But other than that, I'm not gonna play. I'm gonna take my money and chill, man. Chill on the beach, sip a drink, and let the price action do what it's gonna do. We got Bank of Japan interest rate decision. Man, come on, this is gonna be a fire ass week, y'all. Thursday, you already know. Same thing as every Thursday. Initial jobless claims, continuous jobless claims, full week average jobless claims. Then in the evening, we got some global services PMI, manufacturing PMI for the Australian dollar. And Friday, we have global manufacturing for the USD. And we got, oh my God, bro. This week about to be crazy, y'all. I wouldn't be surprised if we get a lot of consolidation type breakout situation. I'm gonna just call it. This might be a consolidating breakout type of week. I'm gonna keep it all the way real, and hopefully we do break out and fill in this price gap. Hopefully we do with this bullish situation set up. Hopefully we do break out and get that. I'm gonna just be patient and see how the bulls and the bears react. But that'll be nice if we can get price to fill and push up. If not, we are going to create an even deeper low for the year of 2022. We already created a new low last week on Friday, but if we don't push high and break above this high, we already changing a little bit of structure on the 1 hour. So that's good. That's a good first sign on the 1 hour. 4 hour, nothing yet. So we still looking at 67.70. That's a strong point to see if we're gonna get into this little I think it's an order block on the daily. No, that was the 1 hour. I was looking at the 1 hour. Yeah. Up in here. This whole area. This whole gap from that news that happened last week on Tuesday. I don't know what you still in this thing, Jay? What you got to say?
Oh man, yeah, I'm all ears. No, it's been beautiful. I totally um agree
With
with
everything I said.
with
I
everything
know
that you
it's funny.
said. Now with news and what we have going on this week and the way last week ended, um, and with the news that we had last week, I think is a perfect alley oop for this to continue to drop further. Um, the
I see
way the way last week ended late in the week to end the week on a major.
And what he talking about is this shot is Friday break,
Yes,
creating a new low for the year.
yes, on a Friday. So that's just like, you know, held positions, um, creating a, like you said, a new low.
Hmm.
Looking to the left on the weekly, and you have a clean range. So I can see, more selling, um, for sure to fill a week wick, excuse me, to like
And we had an
66.
engulfing week too, not to mention.
Exactly. And golfing the previous week, which was a some would think a reversal, bullish candle the week before
True
last.
that. True that. I remember you mentioning that. Yeah, but
Yes,
we didn't close out of the. We didn't break none of these opens or close bodies. That's one thing we
correct,
did. Let alone the wicks up here, but we didn't even break above these bodies right here. So, but
correct.
still,
So,
it was a
but
nice little pinball.
it was nice, and it price broke and towered that candle, but then it reversed back down to not alone break the bottom, but majority filled the wick of that previous.
Yep.
And because that body was so small, that wick is null and void now.
Yep.
That's clean traffic.
Yep.
Um, so I do think I didn't even, that was the first time looking at the news as well. The fact that we have heavy news,
Heavy news.
um,
Interest rate.
interest rates, and you
Fed
have
rate.
it. What was that? Was the interest rate Tuesday or Wednesday?
I think it's Wednesday. Wednesday was like
Okay,
FOMC. Let me see. Yeah, FOMC on Wednesday. Fed rate 1 o'clock. Everything
okay.
at 1 o'clock, and then we got a Fed press conference at 1:30. So
Yeah,
yeah,
yeah. You don't want to be trading like what Six said. Just don't trade that
hey,
day.
shit.
It's towards the end of the day, so you shouldn't be trading anyways. That's in my plan. I don't trade after 10 o'clock. If I'm in a trade, that's something else. I let it do what it do. I got everything set. But if it's after 10 o'clock, 9, 10 o'clock, and if I'm not in anything, I am done for that session, done for that day.
Facts.
So, um, yeah, like I said, with that being said, with that news coming in late, that should be no trade for the rest of that day. And Thursday would be a really, really good day to trade. And Friday, if you are in positions held, like Six said, break even, take profit at a good area, or if you have a stop loss, make sure it's at a zone to what you are comfortable with. Um, but yeah, with Jerome speaking on a Friday, that's definitely going to, um, make some affect the market greatly.
Yeah,
So,
expect even expect him to cause a big retracement for whatever the week did on this week with him
right,
speaking on Friday.
right.
So just
So,
keep that in mind. Whatever the market is doing on this week, it could all be retraced on Friday.
yes. Um, so yeah, I mean,
Ooh, big rejection.
yeah, that was. We are, in new areas, new prices, new lows are being created on, for this year. So this is going to be a lot of jumping and moving and flexing around. So know where
Yes,
you
we're in
are,
new territory.
So yeah, like you were saying, when you go to new territory, you're not coming out there like, what's up, y'all? This
Yeah,
the
you got to see
FX
what's
bros
down.
in the building. You know what I'm saying? You
Right.
gotta come in there like, hey, how y'all doing? Yeah, I'm,
Respect,
yeah,
respect.
come and respect, come and respect. You know, don't try and drop it all out on the table because you get that stuff chopped off. So
That's a good way to look at it.
yeah, respect. Because the market does not care about who you are, where you come from. They got arsenal, so they will
Come on,
spray
man.
everybody that come in the way acting stupid. So
Easily with a small gun. They
with a
don't
small
need
gun,
big.
exactly. So protect yourself because
Yeah,
they good
they good.
with unlimited ammo. You ever played Duke Nukem and you put that code in? Come on, man, you can have a
Bruh,
blast.
it's almost not fun.
Yeah, exactly. At all, at all. I'm done with this game. So, yeah, man, protect yourself.
Real tough. So overall, what Jay talked about, he does see more bullish movement for the week, and he's only speaking to that because of what happened last week. You know, like I broke down. If I go back to the 1 hour, we zoom out. This move right here from Wednesday to Friday and to Monday was just a larger time frame retracement of the further bullish continuation. That's all it was. So if everybody thought this was bullish, we about to go up, we about to fill all kind of crazy gaps or whatever you saw from the previous week, that never happened. That was just a retrace to sell for this big news event that came out last week on Tuesday, and I forgot what it was. I don't know if it was I don't know if it was inflation. I think that was inflation that came out. I believe so. It's one of those news releases that came out.
Yes, that was inflation, but that was also CPI. It was more so CPI than inflation.
Got you, got you. So that was a CPI that created that strong drop from that point. And if you were in line with that, you would have saw that a mile away. And if I go out to the daily time frame, you can see what I'm talking about. So basically, from April, we had the highest point of the year, and from that point, still to this day, which is the 18th, we are bearish overall. So as you see, we're creating higher, lower highs, lower lows, right here, right here. We had the market push up, take out these stop losses, but didn't close above here strong like we wanted to see for bullish continuation. We thought this may be one of the lows for the year. But as you can see, market turned around, came back down to this support area, this order block area, pushed up higher, tapped into the little gap, turned around, and created the low for the year. Then market turned around, pushed higher, and you could say right here with this turnaround and then the break of this little resistance that was somewhat of a change of structure, like the bulls are here. But as you can see, look at how strong that rejection was to further confirm that it was a fake out. These big, strong daily candles. Yeah, we had one little small indecision, but nonetheless, these 2 days right here took out, and not only it took out a lot of days of price action, but it took 2 days pretty much. I would say 3, but I don't know if that was a Friday. I have to look into August 16th, see what that was. But nonetheless, these 2 days took out a lot of price action and came back into this little consolidation zone or whatever. But the overall picture, this was a lower high created, then turn around, another sell off, created a lower high, lower low, lower high, lower low, and where we are today with the low of the year created last week on Friday. So all I wanted to notate overall after I talked about the bullish direction that I mean the bearish direction that we in, this push higher off this double bottom was just a retracement. That's all it was. It was just creating buys to get enough buyers into the market so they can sell. The large institutions, hedge funds, central banks, the algorithms, these large quaint algorithms, computer systems that these banks create, they can't sell their large positions unless if they got a lot of people to buy. Just think about that for a second. Like if you had 30,000 Jordans, but nobody was interested in Jordans, let alone interested in shoes, you don't have no buyers. How hard is it going to be to liquidate your stock of shoes? It's going to be very, very hard to liquidate it. So you got to create a scenario of buyers. And what they do is they put a lot of buy orders into the market off this double bottom, you know, creating a bullish push to entice buyers, retail buyers, every other buyer into the market, thinking that, all right, double bottom. I read this in the book. Every time we get a double bottom, this is the true low. So I'm gonna put my house and everything in on the market, and we go buy it up. But nonetheless, all it was doing was retracing, if anything, to this minor little support it created on the daily, right up in here, or this zone, this big consolidation zone, if you want to look at it as that. And it sold off. And nonetheless, if you're in the order block, you got somewhat of a nice little order block situation of this bullish candle followed by strong bearish pushes, strong daily bearish pushes, plus a nice little liquidation rally right here. But nonetheless, the market had to create a buy scenario so it can sell the rest of its sell orders. Because right here, this is where they sold. This is where the market created a high for the year. Actually, Actually, to be truthfully honest, this is the high of the year. And notice the high of the year was created right at this little resistance created on a daily, trying to break higher to create the true daily uh structure change, but it didn't happen at the beginning of the year. So nonetheless, this was our second yearly high, the true lower high of this bearish move. And yeah, the structure was set in stone right from the market makers. And as you can see, they moved price into certain gaps, enough for them to fill their entries in. That's all it's doing. That's all this market movement is doing. It's just allowing them to fill the rest of their entries. Because like I said earlier, we as retail traders, whether if you got $100, $100,000, or even $1 million, you can't compete with the hedge funds and institutional funds. You can't compete whatsoever. So when they want to create a scenario, they only doing that so they can fill the rest of their sale position. So if they had like 1 million shares versus our 1,000 shares, they would only be able to sell to make it a true sale and entice enough people to get into that sale, probably like half of that position right here, meaning 500,000 of that million. Right up in here, another 250 to get the whole million in. Then up in here, another 250. So now they got the whole $1 million in the sale position. And where do they take profit? We'll know when we get a bullish push. That's when we know when they took profit. And how do you take profit on a large sale position? You create a buy scenario because you only can sell stuff to buyers. Simple as that, folks. Yeah, I'm thinking this market will continue to drop. So let me see if it already took out that low for the hour. Yeah, I'll put my stop below here. If we take that out, I'm good on this tester. And I'll take profit if we do get a push for 10 pips. But yeah, man. That's all we doing. So we'll see how the market plays out for the rest of this week. And we'll keep in touch in the chat. But like Jay said, overall, he see a lot of bearish continuation. So it's not the cleanest of traffic, but we do have a lot of structure, and structure means liquidity, and liquidity means a lot of stop loss grabs. And you got to think like a bank. All right, there we go. We just got took out the market. Stop loss hit. So we're going to look for a better scenario. Maybe the market is ready to sell off from this point, and we're going to respect that and wait for Monday and Tuesday and see what we can get set up for this Australian dollar. And with that being said,
Back
we
to
about
it.
to wrap it up, my boy.
Already. Yeah, man. Tap in, hit me up. I don't know if you want to build after this, but hit me up if
Yeah,
you
I will. I will. I'm gonna hit you up
on the teller.
on yeah, on the
On
teller.
All right.
All right, my boy. Y'all be
All right.
safe. Y'all
Yeah,
tap
y'all
in
be
with
good,
me this
man.
Sunday.
Y'all
We
already
in
know how to contact. How can they reach out to us, bro? Like for any
I
type
mean,
of
the best way, bro, I'm gonna be honest, is Instagram, dog.
Instagram.
I mean,
Instagram.
YouTube is cool, but I
Yeah.
mean, we still growing our YouTube presence, but Instagram, we check that daily. We on that daily, so
Yeah.
we try to upkeep. And also, I think I wanted to let everybody know, we created like a 10 pip a day document that I will be following and documenting on a whiteboard that I'm gonna take a picture and update those trades and in that account from $100. Just the smallest account. We go try to get it to 25K, just 10 pips a day. Simple as
Nice.
that.
Nice.
And yeah, we go document it just to show everybody, like, you
Compound
can.
interest and a power.
Compound interest is powerful. It's very
Yeah.
powerful, and you could change your life in a year. So with that being said, we're gonna be out, and we see y'all boys next week, Sunday, 8 p.m. All right, my boy, I'm gonna hit you up.
All right, brother. Peace,
Peace out.
everybody. Thanks again. We out.
We out.